Most of us do SIPs in mutual funds, but have you explored this option for individual stocks? Not many people do that, but SIP route does hold potential for sustained returns over a longer period of time at comparatively lower risk. So you anyway, when you have more money, you anyway build more positions in your preferred stock, and sometimes you average it out to reduce your buying price. So why not do that in a disciplined manner? So today I'll tell you 3 reasons why you should consider SIP route in individual stocks. If you don't have enough money to invest in your preferred stock in one go, then you can initiate an SIP into it. So you have 2 ways to do it. One, you can simply fix the amount to be invested each month, or you can fix the number of shares. So for example, if your preferred stock is HDFC Bank, then either you can invest 5,000 rupees each month in HDFC Bank, or you can buy 5 or 10 shares of it each month. So the tenure of SIP could be monthly and even weekly or daily. So the choice is yours. Investing lump sum amount of money in a stock is indeed riskier than being invested in the same stock at different price levels. So if you want to curb your volatility risk, if you don't want to time the market and simply being invested at different price levels in the stock, then taking the SIP route is the best way to do it. It reduces your volatility risk. Let's accept it. When markets are on a free fall, then you will not dare to put more money into it. And this is what happened in March when post-coronavirus, sensex kept falling by more than 2,000 or 3,000 points for many days, and people were afraid of investing more in the market. But those who did invest at March lows, they must be sitting with more than 40-50% average profits now. So if you have a running SIP with you, then there are high chances of you letting that happen, letting your SIP amount being deducted even if you feel that you should not invest in the market. So having a running SIP helps you keep your emotions at bay. So although you can cancel or pause your SIP anytime you want, but if your SIP amount is due, then more often than not you will let that happen. And you must know that when you buy at lowest level, then the same amount of SIP amount, the same SIP amount will let you buy more shares of your preferred stock. So it's a win-win situation. SIP in individual stocks has many benefits, but you must be careful about the kind of stocks that you are choosing for it. So if you end up with a dud investment, or if you have started your SIP in a penny stock or any mid or small cap stock which has not performed the way it should, then your losses could be staggering. So when starting out, then you should stick to large cap stocks. And if you do feel convinced that the mid cap or small cap stock that you have chosen has high potential, and you do feel that the company will keep growing and keep performing well, only then you go for it. Otherwise, stick to large cap stocks. Of course, you cannot continue your SIPs for perpetuity, so you must have an exit plan with you. As a thumb rule, you should continue your SIPs for at least 5 years, but still keep reviewing the fundamentals of the company in which you have started your SIPs. Now, if you feel that your initial investment theory doesn't hold any longer, then you should exit from the stock then and there. Now, you should also link one of your life goals with your SIP stock. So, in the stock that you have started your SIPs must be linked with your one of financial goals, and when you are closer to it, then you should book profits.